Hello, West Pacific Market Analytics. And it's Glenn here with a West Pacific week. I want to just come in here at the end of the week and tape a quick West Pacific week to just look at some internals of the market. So we're going to look at some internal models here, more than trades. That's for other videos as I've been putting out and showing you. We'll have more trading videos coming out in short order. But I want to show you some of my thoughts around things as we wrap up this week. It's really getting weird up top here. We're seeing lots of things go off in the modeling, and of course we need to turn down. We've got the Fed meeting next week on midweek. I wouldn't be surprised to see them cut. And remember, any kind of rate cut will be bearish for the market. Whenever they cut, that is basically a signal that the top is in. It is very bearish when they start cutting rates, and they should have done it a long time ago and killed this bubble. This bubble is out of control, and they've got to contain it now or they're going to create massive problems ahead. And truly, it's already going to be so difficult because there's just no exit up here. I mean, it's like, when you start to go into a deflationary bust, you start to go into this situation where things become illiquid. And what I mean by that is you got to find a buyer. Who wants to buy anything that's overpriced? Who would buy a lot of these stocks at what they're priced at? Absolute fools would. So who are they going to distribute to? It's going to be a really difficult issue to distribute stocks up here. We're already seeing people that are trying to sell houses that are slashing and burning prices, and they still can't even sell them. The same situation is going to continue to get worse and worse going forward in the housing market. Car dealers can't sell cars, can't find buyers. It's going to be across the board. It is going to be a illiquid market. And that is the next phase of what we are getting ready to enter. And this illiquid market phase is not going to be short-lived. This is going to be a long-winded trend. It's going to start off with a corrective move lower, rally back up, and then we're going to work ourselves lower. And as I said, there's a very, very solid chance that we are not going to see these market highs again until well after 2040. Now, that doesn't mean we're just going to flush right out here. We'll have to see how it reacts. And we're going to do that by watching the momentum trends and letting that allow the decision making. That's the beauty of this. It takes all opinion out of it. You just go with what the flows are telling you. It reads every single event that is going on within the economy. The flows show everything. Close that up. Got a little bit of noise. And let's get into it here. So here's the disclaimer. These charts and updates are for educational and entertainment purposes. Please read it. All right, let's jump into it here. Okay, so let's go right over here. We're in the Discord platform. And again, if you want to get information on that, the Gmail, my email, address is at the beginning of the form over here. You see it right here at the bottom, destinytrading@gmail.com. Get a hold of me. So here's what we're going to go into. Right here, we're going into the top internals of our member Discord site. And we put some things up here we want to look at. So let's go up here. And let's start with this group. Now, I did put some of these on Twitter as well, but I've put everything that I put on Twitter and everything we talk about goes on here so that you can review it. So first of all, let's look at this market sentiment model. We can see the V channel working its way lower over time, the dot curve descending over time. We see price working up into it, and now we're priced above here. And that means that price is now going to start to head lower into next year and probably out further too. So the first move is going to bring us down, and then we're going to have to see. But you can see we've got this floating out in the void now. We can see the velocity coming out. We can see the trend coming out. We had some pop-ups here because you see a little bit of liquidity coming in, a little bit of liquidity coming in. You see a bit of a rise in the trend, a bit of a rise in the trend. And it doesn't matter. Even if price is popped out, and we get a rise in the trend and a rise in liquidity, that can still push up price. But what's going to happen is once it reverses, it's going to want to have more of a larger tendency to want to pull it lower. Now remember, when we're looking at market sentiment, we're looking at just one technical. So I'm going to show you that in a few of these others we're looking at. But when we start to see these bearish setups in a lot of the technicals, that's where you got to get worried, okay? So that means we could still have price floating out here even in this market sentiment model because of what it reads. That just says that, look, market sentiment is draining. You've got to be cautious about price being up here. And then we go down and we get into this model that I call thrust. So this is market thrust. And you can see in the market thrust how nicely this timed it. But first of all, before we look at what's going on here in price and time with the technical, we are modeling the red line with overlay here of the SPX. And you can see how nicely this trends and trades to the trend. So in other words, you can see our liquidity coming out, all the way back here in 2016, 2017. In the thrust model, liquidity is draining over this entire time, which is pretty amazing. So we've just got a slow continuation drain in liquidity, but there's more components to it than just liquidity, because what happens, and I've discussed this in a lot of the modeling, as liquidity drains, it's then going to have a kind of a gravitational pull, or a graviton pull on the trend. It works the same way. If we look at things in physics-based models, whether it be in mechanical-based applications, or if it be in quantum physics out in space-time, and we're looking at how things happen in the universe, in other words, things along the lines of gravity waves reflecting off of planetary bodies, reflecting off of suns and stars, etc., that's going to affect the gravity waves that light and everything travels in across space-time, which is what they're finding out in the last 120 so years of studying this idea of quantum physics. It's very interesting. But the idea of the quantum physics models applies very much here to earthly issues and markets. It's the same concept. So as the liquidity drains, that's going to have a graviton or a pulling effect on the trend. So you can see over time, as liquidity drains, we still had the trend building up, but as the drain got larger and larger, it's starting to pull down, you can see here on the trend. And then it flatlined a little bit, and now it's starting to roll. And typically, and that's the test here, because this hasn't happened in 120 years to be able to really test what this is going to do, because we're basically modeling the whole rally out of the 1932 low when we're looking at these momentum trends. That is just incredible when you think about it. So it's an entire buildup over a huge amount of time. And so as the liquidity drains, it's going to pull down on the trend. You can see it's starting to pull down on the trend now. You notice it here, and we popped out above. But again, we can have these pop-outs because for us, there might be another model that says we can justify that, but we can see that we really shouldn't be up here. And you can notice back here that we can rise, and we had a corrective move, we rose, corrective move, rose, and then this bigger corrective move, because here we're working up into the V channel. Now the V channel is another component, is another measure of momentum. Just like this trend is a measure of momentum, this velocity is a measure of momentum, and this channel that we call the V channel, which consists of the directional circulation and the momentum of circulation, is also a momentum-based indicator. So the whole model is registering different types of momentum flows across the entire spectrum of what we're modeling. And here we're modeling thrust. So you can see that we came up into the V channel. We were able to break out above, because the rule in the model is you can get above the V channel if there's a trend above. So of course we've got a trend above. We came up, and then we came back down into the V channel again. And then again, it said, well, wait a minute, trend's still above, and it went up again to the trend. Now we can't price up here. This is definitely suggesting a top. And then when we see this across all the models, this is pretty aggressive to see this far. Now, what's interesting, if you look here also on this idea, I should have pointed that out, you notice how the red indicator has now hit the black line up top here, right here. You see this? You see how it's hit the black line? There's another rule that I have found in the model that once you come down and test the pink line, the pink line mock, typically then you need to have a rally back up and hit the black line. So what I found in my research is once this red or whatever we're modeling goes from pink to black, I call it the pink to black test, that's typically indicative of the bigger top. So you'll notice we've now done that in thrust, pink to black. And you go here to the modeling the flow, the same idea. We've gone from pink to black. So we see this mock to black, and all three of these models we're going to be looking at. And I actually call these three the three keys to the market internals. Out of all my research, I found these particular three indicators are very key to what the market is going to do as far as both price and time. And because again, the dot curve is a measure of time. You notice here, this whole thing topped out all the way back here in 2020, and now it is going down. So it's measuring time going forward based upon where price has to go as far as the positioning of the V channel's top dot curve. So Again, you can see we came back up into it. We came down, tested the pink line, and we've got pretty much the same look to the flow model that we had on the thrust model. And now we go to our final key, which is, oops, excuse me, that's the next model I want to show you after we go to the volume model. And again, look at over here, all the way back here at the high in 2021, coming out of that 2020 low. You notice before the market broke down here in 2022, the volume model went all the way up and tested the dot curve and tested the trend. You see it right up there in my red dot of my cursor, and then it came down to the pink line, and now it's finished up at black. Now what's curious is, again, in all three of these models, we've broken out above the dot curve and the trend. I mean, these are pretty aggressive moves. These 5 sticks we've got going up here. This is going to exhaust. This is an exhaustion indicator here, going the momentum of circulation up to the black trend, and especially with both trend and the V channel being below in all 3 models. We are there, folks. We are within a short time now as we finish off this week of this all breaking down. Now, I'm not going to get into so much what we're modeling here on my YouTube channel, but I just want to show you this because this is really interesting. Again, the same concept. We're going all the way back here to 1991, and what we're modeling is this line you see here in the model, okay? And of course, we've overlaid price because we want to see how the data affects price. So you can see we're coming down off of this really big high over here, incredible high back here in the early 90s. And then you notice as this plunged, once we got right down to the top here in 2000 of the market, then the market started to follow it down. So you notice as it comes down here, the market had its corrective move. And you can see our indicator came down and overshot the V channel, and then the velocity built back up, and we formed a low. So you notice the low here is still below price, but that's okay because, you know, all we're looking at is the directional typically of some of these indicators, not so much where they're positioned. What's mostly important when we're looking at the overall positioning in the market is where the V channel is. And you notice when price is down here, we've got the velocity channel, so we wouldn't have seen this at that point in time. But if we were like here and none of this time had come in yet, we would still see a rising V channel. So we know that price at some point is going to have to rise because that channel was working up. And then notice here right at the top, right here in 2019 and into the beginning of 2020, the momentum topped out on this indicator. So notice this is the first time we had a momentum top out. So we basically now have an entire 5 years, right? 2020, 21, that's 1, 2, 3, 4, 5. We're going into 6 years now since momentum topped out on this indicator. So it's now forming a downward V channel. But you notice as this line came up, it entered into where it needs to price. It has to price back into the V channel. And so it rose up, entered into the V channel. You notice it was right here in 2020 at that low, and then it came up into the V channel. Here's our 2022 correction, and it came down, and then it still had to rise up because it could come to the dot curve. And you'll notice at this high now, we have now hit for the first time in history, again, in a long time. The last time it was at the dot curve was at the dot curve back here when it was breaking below it in 2002. And now we are testing the top of the V channel. Now a test of the, the V channel. The test of the top of the dock portion of the V channel is typically where we've reached resistance. And so most likely it's not going to push any higher. And you notice every time this thing turns down, notice it, correction, correction, correction. Every time this turns down, the market corrects. But the thing is, man, the market is way up here, which says this can't go any higher. So this has nowhere to go down and then bounce and then go down. So this is going to pull the market down. Interesting. Now here's that same model. That's the big picture. And here we are taking it closer up. So you can see we're only going back to 2016 here. But what happens is it changes the dynamics a little because we've gone from a big picture monthly model to a smaller picture weekly model. And so if we plug in the dynamics of this last model, all right, we're going to plug in this low here. You see this low here in 2020, and then we're going to plug in all these lows and highs into this next model. So in other words, we're plugging in right here, and on that big picture of the dot curve momentum, that means right here, look, big picture dot curve momentum top, right? So in other words, if we go back here, this is right here at the start of 2020. You see when it came down, here's the top right here in 2020 and this small move down where we had the corrective move in the market. So then that's going back here to where we saw this corrective move. So right here, we're only priced at the bottom of the mock indicator. In other words, and we're only just entering the V channel with the potential, as I said, for this to come all the way up and hit the dot curve, which it now has done. So we're basically mirroring this move from here over to here. Okay? So in other words, this is when we were just, at this point, we were just hitting the bottom and entering into the V channel. And then here, the big picture deep in V. So in other words, at this low on the signal, this red indicator at that point was still deep in V, saying that it had room still to rise to the top of the dock channel. So let's take a look at that, right? 2023, here we are at the low of the 2022 move. You see it coming down, and we go back over and we see here's that move down. And what I mean by deep in V is you can see that at the low in 2020, I mean, it doesn't mirror price, and that doesn't matter. It's just the directional you can see has a huge effect on price. I mean, even here, right? Look back in the 2007 corrective move, it was heading down and the market was heading down. So we're only interested in directional. We're not interested other in the position with its own indicator here to the technical indicators. And price is more so that when it moves up or down, it's going to have an effect on price. So you can see here we're deep in V, right? At the low in 2022, we're way down here, closer to the mock portion of the V channel, and we still had to rise up. So in other words, what I'm showing you there is right here, we still had to rise up. Now we're all the way up here. And notice the indicator still is not rolled over. So we're going to want to see this indicator roll over. You see how it rolled over right here? You see how the trend burst and we had that big move down? But notice this time around, the trend is way down here, right? We've never had price this far from trend. Notice here, we're pricing in trend, we're pricing in trend, we're pricing in trend at this top, we're pricing in trend at this top, and we're pricing in trend at this top. And here, our trend is down here. This could be a really, I don't know what event is about to come out, but this could be an interesting move lower here until the end of the year. And you notice the V channel is down here. But right now, we are all the way at the dot curve at this top. This is interesting. All the way at the dot curve at this top, right here, on that particular indicator. So we're going to be watching that going forward, and I'm showing my members that when we're talking about it because it's really interesting. And if you look at a lot of these indicators here, we're modeling this red line, right? See this red line, look how high it is above the dot curve, right? You notice here, it got pretty high, and then we had that corrective move right here. This is that first move down. And notice we got high here, we had a small corrective move down. And notice the bigger corrective move here in 2022. And notice the short little corrective move here in 2020. But notice, again, that when we had these corrective moves, that the dot curve on this model as well was just topping out. This is modeling different market internals. And you notice here, this curve is topping out in 2018. So the top in this indicator, which is this red line, topped out way back here and is now moving lower over time. So you can see that we can pop out because you notice here it popped out. You notice here it popped out a little bit, popped out a little bit, popped out a little bit, but it doesn't pop out much. Even all the way back here, look, we had a bit of a pop out, which is about as big as this one we've got here. This is actually one of the largest pop outs we've had pretty much anywhere in the entire model. And you see all these pop outs we had. This was back here in 2006 and 2007. And then you notice when it came down, there's your corrective move from 2007 to 2009. And look how the signal just fired straight back up out of the low. Now it had to fire straight back out of that low because, again, where did red have to go? It had to go up here in its V channel. But you notice now red has to go down here into its V channel. So this now is going to be pulling this red indicator lower and lower going forward over time. And it can come down and it can pop up again. And again, it's not necessarily indicative of price. We're just looking at the directional. So you can see when we're going down, the market's correcting. When we're going down, the market's correcting. Now this can go all the way down to the bottom of the channel. So you notice here at this particular 2020, we didn't get all the way to the channel, but you notice here in the corrective move in 2018, we were able to get down to the mock curve and bust below it. But then we knew how to rally back up because the curve was still up here. But this is a wild extension above the dot curve right here. This is done. It's already starting to buckle around up here a little bit. We can't go any higher in this model either. So everything we're looking at is indicative of getting pretty close to this top, right? And here we're looking at this price momentum model, and you notice the same idea. Look how the trend is way down here now, is rolling over. So the same idea. This looks ready to have another radical move lower, and I think it's going to be a more radical move lower than the first move lower we had here in 2025. Simply because the velocity's down here, and you can see throughout the history of this model, including the big corrective move back here in 2020, we never had price floating out here above the trend. This is very interesting. I mean, it just looks ugly. Now look here, of course, you can see here we are topping out here on the trend. This is all the way up at the top of the model. This is toppy as can be, and this is the broker-dealers we're looking at here. Boy, if they had a run, this has benefited them like no tomorrow. So that's what we're looking at. Now I wanted to go over here a couple more things. Let's go into semiconductors. I posted a model here on semiconductors. You notice here on semiconductors, we've now had the dot curve topping out in 2023. You notice it now working lower. Okay, so I've overlaid the semiconductors here in blue, and I've overlaid it here with the market in red, and they track pretty much perfectly, of course, because tech is a big part of the market along with finance right now. And you notice that we were breaking down, right? We were breaking down in this first corrective move, but somehow they were able to rally those semis back up, and we can see the trend kicking back in and it riding up. But you never like to see a trend spike. It's pretty rare to see a trend spike above velocity. You see that? Never had that going all the way back, right? It's always been kind of flowing within. But you notice we didn't get any velocity out of this. So we didn't get any uptick in velocity, and it's rolling back over. Our DOC channel, or our momentum V channel, is just rolling lower. Once this channel exhausts, then we're going to plunge lower in the semiconductors. Let's go here into bonds, because I've been watching the bonds. Well, let's go commodity first, then we'll go into bonds. I think it's interesting. I was looking at gold. Gold did a black line hit. See it right there? First black line hit. Here's your pink hit back here in 2016. Rallied, and is now finished. I am now calling officially a top in gold. Right here, you can see it. Everything's rolling over. Here's these final three candles pushing higher. Final thrust on gold. Top is in. I am calling the top in gold. And we're going to watch that. I'm not shorting it just yet. Want to let confirmation in the next week or so, and then we will take a look at it. Let's go over here into the bonds. I want to show you three models here in the bond area, and I think this kind of plays along with our idea of the top, and I find it very interesting. Look at junk. Junk hit the black line, right? Didn't get to the pink line, which is unusual, but it's rallied all the way back up to the black line. Same, Mooney. Because you know why I don't think these hit? Let me show you something. I'll tell you why I don't think these hit the black line. You notice here is the collapsing V. You know, I don't know how it was able to rally with a collapsing V. We're going to see a bond market rout ahead. I think we're going to see a absolutely tear your head off bond collapse in the next couple of years. It is going to be ugly because there's so much debt, right? I mean, come on. I mean, I think it's just got to be nasty. I think we're going to see, like I said, a illiquidity event across the board. Everybody's going to say, well, where do you put your money? Well, typically, where do you put your money in illiquidity balance? You short the damn thing. You short excuse my French, you short every single uptick rally, and you stay in cash. Yes, cash is an investment. And cash is an investment because remember I told you the dollar is going to go higher. And the dollar is going to go higher because all that money is going to flood into cash. The dollar is still the safe haven. Don't listen to anybody. So look, we got a top in junk, and look what happened last week. Look at that massive spike rise in the Mooney market. Black line hit. Same idea. Look at the collapse here in the channel. And you notice how it's formed this flat line on the mock. I call this a finishing wedge. So that means price has got to go from here all the way down here in the finishing wedge. That puts bond prices back to the 2014 area ahead. And I'm not talking right now. This is going to take a couple of years, or it might just collapse at some point. We might just have a bond collapse. But we can't call that yet. We just got to see how it's going to develop. Because Mooney actually, which would make sense, Mooney and junk have the most ugliest looking channels. You can see the flatline channel here on junk. I mean, junk is junk. Who wants to own it? And Mooney's, every city is bankrupt. Why do you want to own their bonds, right? There's huge problems going on in the Mooney market, but it's all swept under the rug. And of course, corporate's got a much healthier looking V channel, more normal, hasn't bottomed yet. But we've got the same thing here. You notice the corporates as well have now topped out on the black line. So we've got triple hits on the black lines. We've got hits on the other models. This is all indicative going into the Fed next week that we're here. Market's right, market's ready. They want to push it a little higher. We hit 6,000. They want to play some games and get the old 666 number in there. We'll see. 66 more points on the SPX. Whew, what a crazy time it's been. But anyway, we're there. We're ready to go. We're in the game. We're in the rock. Getting out of here. Giving that update. And I'll be back at you with some other info. Have yourself a great weekend. Thanks for tuning in. Hit that like, hit that subscribe. Glenn out of here.